Hi guys. So this is the video we'll be talking about um, confluences. So like I promised, here we go. So we'll talk about, let's put it here. We'll make it, no, it's too big. Let's make it 28. So we talk about confluences. Okay. So as a trader, you should have a set of confluences you use. Okay. You should know exactly what you want to see before taking action. Okay, so we know about an uptrend, a downtrend, a consolidation trend, whatever. But now the question is, what are the things that validate your entry? Let's take, for example, you are in an uptrend, right? Price is creating higher highs, higher low, higher high, higher low, higher high. The question is, how do you get your entries around these levels? What are the things that give you the validation that it's time to get in? Because normally this is where you look for your entries, around these pullbacks. Okay, so today, since we're talking about confluences, the first confluence we'll look at, okay, let's say we are in an uptrend. Let's change the color. I want to make it yellow. Yes. So let's say we are in an uptrend, okay, and price gives you, is showing you an uptrend, or it is breaking structure, like you have a break of structure here. And now, after the break of structure, what are you looking for? The first thing you should see is a pullback, okay? So the first thing you should see before you take any action is a pullback, okay? Once you see a pullback, what is a pullback? I'll use this example to guide you, okay? I'll use this example to guide you the uptrend scenario. So this will be our first uh, confluence. So now, no, I want to take it the other way around. So let's assume that we had a downtrend, okay? So we had a downtrend. Price was creating lower highs and lower lows. And eventually, price came up, took out the first structure, because once you notice this, that's when you start looking for your opportunities. So you have the first break of structure. You can call it a change of character, okay? Now you have this change of character. Let's mark it out. Let's write the name, change of character. This video might be long, but you need the video. It's a need, okay? Because this actually validates your entries. So we have this as a, why do I keep making this error? We call this a change of character, okay? Now, like I said, the first confluence is a pullback. So what is a pullback? The pullback is, or a pullback is this move that comes back, all right, during an uptrend. So we have an impulsive move and a correctional move. So let me try to name it. So we call this impulsive. Okay, how do I do to even change the style? Well, it doesn't really matter. So we call this move the impulsive. Let me make it green because we are in an uptrend. This is an impulsive move, right? And then this A small move is what we can consider, or is what we call a correctional. So I'll make it a little smaller. Good. It's what we call the correction. You can call it correctional move, yes, or a pullback. Okay, so you can call it a correctional, okay. Now, once you have a pullback, that's the first confluence you need, a pullback. The next thing you need that I always use is FIP. Okay, so I call this a FIP retracement. Okay, a FIP retracement. Now, what is a FIP retracement? That's where we use extra tools like the Fibonacci. Okay, this is it. So I have a video on how to use TradingView. I believe you'll see Fibonacci, and I'll make a complete video again, a complete tutorial on how to use TradingView for you guys who are starting up and maybe are finding it difficult. I have a video on how to use TradingView on your phone, so I'll make a tutorial on how to use TradingView on your laptop or computer. Okay, now you take your Fibonacci from the lowest point price got to the swing low. Okay, so this is a swing low, this is a swing high, and this is the most recent swing high that was created. Okay, because this is where price stopped. So we take from this low to this high. Okay, now if you look at the Fibonacci closely, you'll see something. Let me widen it so you can see. So you realize that we have some numbers around here. We have negative 61, we have negative 27. Those are extension layers. We have 0, which is the highest point. Then we start having 21.6. We have 38.2. We have 61.8. We have 78.6, and we have 100 levels. Okay, so now you are expecting that price should give you a minimum of 50% retracement or 61.8% retracement. Why not even 78% retracement? Those are the FIP levels that you are expecting price to retrace to before you get your confirmation. Okay, good. So that is the second confluence. Okay, now let's add the third confluence. You can use trend line as a confluence. Okay, so you can use the trend line as a confluence. Okay, you can use trend line as a confluence. So at that point, maybe the trend was already bullish, so the trend line comes in when the trend is already bullish, and now you see that maybe this is the second touch, the third touch. Okay, so you can use a trend line. Let me change the color. It shouldn't be like that of what we have here. So let's make it blue. Good. So you can use a trend line as a confluence. You can use the trend line as a confluence. Now let's add another confluence. Okay, the next one is an engulfing candlestick. I've been singing about this almost on all of my videos. Okay, so I use the engulfing candlestick as a very, very important confluence. So what is an engulfing candlestick? Let me make it clear for you to understand. There are so many confluences. Okay, some people use fair value gaps, order blocks, liquidity sweep, whatsoever. But this is pure price action that I'm telling you. These are things that we see on the charts to give us confirmations. Okay, so what is an engulfing candlestick? Let's take, for example, price is coming down, creating lower lows or creating bearish candles. Sorry, let's just clone it. Okay, so let's make this red. Red. And then automatically you see a big green candle comes up and swallows up at least one whole candle and maybe start swallowing the next one. So this is what we call an engulfing. This is a bullish engulfing. So if we're going up and the red candle comes down and swallow, we'll call it a bearish engulfing. Okay, so once you have it around this area, okay, within your pullback, that's a confluence. Price taps on a trend line, that's a confluence. If a price is on a fib level, that's a confluence. Maybe you have a pin bar, that's a confluence. A pin bar, or we can just say candlesticks. Okay, candlestick. We have so many reversal patterns, continuation patterns, so you know some patterns that can be used. Personally, I love to use engulfing because when I see an engulfing candlestick, it tells me a lot of story. It means sellers were dominating, but now the buyers have come in with so much energy that they have killed so many buyers, so many sellers, to the point where they've engulfed a whole candlestick and maybe started engulfing another. At times, it engulfs even more than 2 candlesticks. Okay, so these are some of the confluences I use on the daily. Now there is this other confluence I use, which I call key levers. Okay, so these key levers are also very, very important. I use them on almost every pair. When you see these round numbers like 1.29500, 1.29, 1.30, 1.3500, 1.60, okay? The key levels. I have a whole video telling you about key levels, okay? Because you can use it as a strategy on its own, and you can also use it as a confluence. So these are some of the confluences I use. And once I see this around this area, around this pullback, this correction, good. We know that, okay, there's a possibility for price to continue to the upside, or these are the confirmations I need to be able to take a trade. Okay, these are the confirmations I need to be able to take a trade. So once you see them, you enter and place at least a 1:2 or 1:3. So that is it on confluences. And I believe these confirmations are some of those things you have been trying to understand how to actually use them, because some people see good setups, they can identify the trend, they can identify everything, but they find it difficult to actually spot out where to enter and where to exit. Okay, so at least this video I've taught you on how to get entries, how to get good entries. What are the confirmations you need to get an entry? So the first thing you need is a pullback. Okay, because you cannot just see a change of character or a break of structure and start taking action. No, you have to wait for price to come down so that it should be cheaper, because you are buying. So if you are buying, you should buy cheap. If you are selling, you should sell expensive so that you'll be able to make profits, right? Now, the second thing we said is you wait for it to pull into a fib level. Okay, into your fib level. The third thing, in case you are using trend lines, you can say, all right, let it tap on my trend line. The fourth thing, let it tap on my trend line and show that price is not willing to continue going down to break through the trend line. Now you have the engulfing candle, which is one of my most important, the engulfing candlestick. And then you can as well use a key levels. Key levels also act as support and resistance, okay, as support and resistance levels, because those key levels are levels where price always react from most of the times. Okay, when price gets to that level, it bounces off. If it's above, if it's below, it bounces and goes down. If it's above, it bounces and goes up. Okay, so if a key level matches with your pullback, engulfing, and all the rest, those are good confluences. So what are confluences? These are confirmations that gives you the opportunity to take a trade. All right, thank you very much for watching this video, and I believe this video must have helped someone. And if you are that person, do not forget to tell me in the comment section how helpful this video has been to you, and show some love by subscribing to the channel, because I do this always and I do it for you. All right, so see you on the next video, guys. Ciao.